All right, good morning to all of you. All right, today is 12th of November 2014. This is Mark, and I'm here to give a commentary on the markets. So I think it's been quite some time since I made a video because actually I'm quite busy with a certain project. But anyway, there's nothing much going on in the markets, right? I talked about last month, right? The S&P 500 50-day moving average is actually sloping down. So just be careful with all your positions. And if you were to long, just to take a quarter position. And you can see that the market has staged a very strong recovery with small candles the last few days. And I think this probably means that there's some indecision in the market, or the stock market is actually consolidating a little bit, which I think is a good sign rather than it just keeps going up. And anything that goes up very hard can come down very strongly also. So that's one of the reasons why we have to be careful in the market. All right, actually I made a video beforehand about 20 minutes ago, but unfortunately the sound didn't work out, so I'm quite pissed with this. All right, so I'm trying to make this video a little bit faster this time. All right, so you can see the S&P 500 50-day is actually kind of sloping upwards already, and we are trying to switch to a bullish mode. But you can see that the move from 182 all the way to 204 is actually a very, very huge move. So I would prefer at least a consolidation for a while, or pull back a little bit before we look for better long positions, because I think this move is a little bit too big and can be quite dangerous for some people to long it right now after it had moved from 181 to 204. So there's something to take note. So just back to some of the positions I've traded. I talked about eBay. Just take a look at the video that's from last month, if you're interested, of course, to refresh what I talked about the last time. And you can see that after taking profits around this zone, this area, and I said that to look for longs if it starts to turn again. And the long price that you should be looking at, right, is actually over here, $50.29. And if you had entered here, your stop will be probably around here. Okay, this is what I entered actually. So, but then it was at a 1/4 size position. I've sort of moved my lines already beforehand because I did a video, but the sound didn't work. So I have to remember again where I put my lines. So anyway, my entry was definitely $50.29, and stop is roughly around this $48.50 zone. And I've already made about 2 to 1 on my position, and I've put my stop to break even already here. So eBay has been a pretty fun stock to trade for the last 6 months. You can see the ranges are pretty big, and which you may not get in the Singapore market. So as traders, we are slave to volatility. So we have to go to where the movement is. And eBay is one of those stocks that are highly tradable. It's highly tradable. And if you take the time to know the behavior of this stock, you can actually make some pretty good money out of this stock itself. Okay, so right now I'm trying to ride on the 10-day moving average to see how far it can run. But as you all know, my style is to take some profits off the table as fast as I can to mitigate my risk, and then leave a small position for it to ride as far as I can. And I think this is just the way I trade. Doesn't mean that it's the right way or the wrong way, but try to find a style that suits you. Like for me, I don't like my stocks to be too big. All right, it has to be in a zone of reasonable area, because if it's too big, then unless you're riding a more investment oriented position, right, then I don't think it's prudent to put such a big stop. Okay, next one is NRG. Okay, so NRG, I actually managed to long it last month, about $29.54. I took about half when it's 1-to-1 risk to reward ratio, and then it stopped me out a break even right over here. Okay, and then since then, because the market crashed, it has actually came down a lot more. All right, and a long position could have been taken around $28, but unfortunately, I did not take this trade lah, because I'm actually in other oil stocks like NOV and ExxonMobil. So for NRG, probably in hindsight, this definitely would be a better trade lah, because you can see the movement here has been huge, from about $27 all the way to $33.50. So this has been, if you have taken this trade, it would be phenomenal. It probably give you about at least a 3 to 1 or 4 to 1 risk to reward ratio in a very short span of time, probably about less than a month. So I think in hindsight, of course, this would be a better trade lah, because this is a stock that is slightly smaller cap as compared to NOV or ExxonMobil. But then again, don't cry about trades that we've missed, okay? And then yeah, ExxonMobil, I talked last month that I'll probably go into a big chunk of my not big lah, okay, supposed to be big, okay, but because of the 50-day sloping down on the S&P 500, I entered a reduced size, but still a considerable position, $91.82, that was my entry price, with a stop at $89.72. And so the way I derive the stop is drilling down to a smaller time frame. So if you have intraday charts, I highly encourage you guys to do so, because there are hidden support and resistance levels on the smaller time frames that you will be able to see if you drill down to the smaller time frames as opposed to just a daily chart. And in terms of entry price and precision, definitely a smaller time frame would be better. I don't use the 5 minutes or the very small time frames, but generally a half an hour chart to a 1 hour chart would be pretty decent and enough for most people, because I don't want to be involved in like 5-minute charts or 1 minute chart. I think that is a little bit too micro for me lah. All right, and so and one of the reasons is because if you use drill down to a smaller time frame, you can actually enter at $91.82, whereas if you wait for the daily chart to close, you'll be entering probably around here, which is close to $93.50, which means that you'll be giving up quite a lot of potential gains. Okay, and from here I already made about 2 to 1 on ExxonMobil. So I'm putting my stop to break even right over here. Alright, and so some of you may ask, hey Mark, why are you buying a stock that is coming down so badly? And you can see the XLE, which is the energy sector, is as you all know, oil has been coming down pretty drastically lah. And the energy sector has been correcting for about 25% or so, from about $101 to about $78. And all I have to say is that I don't think there's a very good answer to that, because for me, I believe that you should be buying something that most people are not willing to buy, okay, in certain areas of the if you want exponential gains, then you have to go to places whereby people sort of hate it, because when it turns, it can be pretty big. Like you can see the last time I traded ExxonMobil was where there's a big move down from $99 to about $88, and then it turned up a very huge movement. And let's say if you were to enter here with a stop over here, right, your gains will be a lot more better than if you were to wait for an established trend. If you wait for established trend, then you'll be buying on a much higher price lah. So this is something that it's just my personal way of trading. Of course, I look at the fundamentals of the company and the stock itself. I don't just whack any stock that I like. So it's good to know a certain few stocks to help you know the movement of the stock and how it behaves in a general sort of way. I'm not saying that trend trading is wrong. Of course, there are times where I trade trends also, definitely, without a doubt. So it just depends what kind of style you prefer. If you like to trade trends, then you can just use the 50-day moving average as a way to trade trends. But probably your entry and your stop must be slightly smaller in range, because trends sometimes can be quite volatile for especially the US markets. And nowadays trend trading is a little bit more difficult. That's what I would feel, unless you're doing commodities or maybe futures, then they tend to be a little bit more trendy. But for equities and stocks, usually it has pretty well defined movements and up and down movements that can be quite huge sometimes also lah, that are not so trendy in my opinion. Okay, so like I say to my students, so one of the criteria that I like to take a nibble on the stock is when I really feel that I don't dare to buy it, and that's where if it pans out, right? Of course you watch your stops and your and stuff like that. But let's say if it really managed to recover, you can make multiple risks of your money lah, multiple times of your risk, and I think that is a much better scenario lah for trading. And in trading, it's just very simple. There's no need for a lot of things to consider, like indicators and stuff like that. You just need to find a place where you feel there is skewed risk to reward ratio, where your risk will be very small and your reward will be very big, and basically that's what you're looking at. Okay, another one of my favorite stocks that I've been trading is UNH. Okay, UNH, if you just draw a Fibonacci over here, you can see that it pulled down over close to this 618, which you can take a bet because you can see a well-defined trend line over here. So entry price at $82.29, which I taught my students before, and then put a stop below $80.62, and you can ride such a big move on UNH, which is fantastic. I think UNH is one of the most stable and very nice movement stocks to trade, which I've made money over and over again with this stock. Okay, and so, but for me, because the S&P was tanking down pretty hard, and so I was not comfortable buying a strike of the 618. So I drew down to a 30-minute chart and I entered on a much higher price, which is here, $86.96. All right, with a stop. I can't remember where my stop was because I shifted, but I already made about two times my money already on this stock. All right, and it's actually at break even right over here, really. Okay, so very, very good stock to trade. Right now it's too high to buy. All right, if you want to buy here, I think you likely be a fool lah. But I mean, I don't know lah. I'm not trying to be I don't know what to say. Okay, but generally, if you can see the stock move from 81 to 95, that is a huge move, and I want to be the one buying over here or here. I want to be the one buying over this region itself lah. Okay, so hopefully it'll pull back, and then if I see anything interesting, I may continue to take a bet. Okay, next one is IBM. So IBM, I talk about, let's say if you were to buy a strike over here, you have made at least 1-to-1. Right. So this is why I like to take profits fast and then put a stop to break even as quickly as I can, because you will never know where the stock is going to move. It can continue to go up or it can just crash down like that. All right. Nobody is going to know where the market is going because let's just face it, if a big fund were to dump the stock, it wouldn't come and tell you, right? It won't come and tell you, hey, dude, I'm actually selling my stock, liquidating a huge position of my stock. All right. And they're not going to tell you, okay? So you have to react to the market accordingly. Okay, and I also talk about I want to be interested in IBM towards the end of the month, and this is why I feel that there's more room for correction. And you can see IBM actually came down, gapped down so hard because of expectations of the earnings were actually much higher than what the results were. So after it gapped down, I was actually start to take a nibble. I bought it around 162.749 with a very small stop below here, which is about below 160 lah. All right, and hopefully you wanted to see. I want to see it actually hopefully close the gap. Okay, probably to 177, 178. That would be a pretty good trade. So you can see that this is a skewed risk to reward trade. Okay, my risk is probably around here, and my reward can be multiples right over here. Of course, I could be wrong lah. I mean, nobody will know. But this is what you're looking at. Maybe you risk one time and then you make 1, 2, 3, 4, maybe 4 to 5 times your risk. But of course, along the way, you see anything that you're not comfortable with, you can actually take some positions, peel some positions off lah. Okay, but generally you want to look for a minimum of 2 to 3 to 1 on your positions. Okay, next one, last one is NOV. Okay, NOV making sort of break-even profits now. I entered around $72.93. After the thing came down, it started to turn, and that's why I entered. And my stop is around $69.20. Nothing to talk much about here. It's just another oil stock. with trend line play over here. Let me drill down to yeah, so there's a very nice well-defined trend line over here, and that's where I start turning, then I take a bet around here. It may or may not work, I don't know, but I trade accordance to my plan, which I think you should too. Okay, and maybe two ideas I can give right now, which I'm trading, is MEG. Okay, Media General. You can see it's a very volatile stock. Okay, it even writes at M over here. And my entry price is at $14.59. Sort of very small profit here with a stop below here at $13.61. And hopefully it can start to run because it tends to do well during this period of time. We will never know, alright, but this is one of the ideas which I think is still quite close to my entry price. So if you want to try, you can, but beware of earnings and stuff like that. Okay, I'm not going to do the work for you, you have to do the work for yourself to be a decent trader. Okay, and then the next one would be GPS, which is Gap. I think is the Gap retailer or something like that. I can't remember, but you can see it gap down based on earnings also. Okay, I'm not sure why the earnings icon are not appearing on Think or Swim recently. I'll go and check it out with them. But yeah, generally, you can see the turn here. So my entry price was at $37.77 with a stop at $37.01. Already made 1-to-1 and put my stop to break even. But I think it's quite close to my entry price. So if there's an opportunity for you to enter, I think you can give it a shot also. Okay, so that's all for today. If you're interested in my what I do or what I teach, you can actually go to this website called shareshh.com. Okay, input all your details here if you want to receive my newsletter and updates, and sometimes I give discounts on my courses over here. And if you want to learn more, you can just learn more about the ShareSage course, and you can see the curriculum details and the brochures. Generally, the material here is pretty up to date. Okay, of course, any updates I'll usually update within the course itself, but I constantly update my material also. And if you're interested to attend the course, you can just go to the contact page and drop me an email. Alright, and I'll get back to you on this. So I think that's all for today. If I see anything interesting, I will come back the next week or the next week to give you some updates. Alright, thanks a lot.